Trading crypto in a 5-step process. I'm going to go through that in this video. Here it is. So we actually start with our exit strategy first, and then lastly get to our potential entries. I'm going to show you exactly how to come up with trade ideas, how to think about how crypto moves, because crypto is not Forex, it's not stocks, it's very, very different. We have distinct cycles here. We can trade that. I'm going to go through all of that in this video, including how to think about where is the performance coming, how to do that research. So we're going to go through that in this video. I'll leave timestamps for all of this down below in the description as well. This is the process of each and every trade, whether you're looking to day trade, any time period. If you're looking to trade over a few days, weeks, months, this is the process of that trade. So you have specific timelines and prices that you're willing to trade at. If you don't have that, if you're chasing narratives and chasing prices, you're already on the wrong side of the trade. So you have to come up with this plan and think ahead. Implement this plan, and then along the way, see is it working out or not. And that gives you a distinct risk-reward ratio that you can go ahead with. So we actually start with the end, which is the exit, right? So what is the catalyst for this trade? What is the thing that is going to reprice this asset? There must be a reason why you're doing this. So we're going to start with that. Then we go through the potential of the trade in terms of what is the risk reward? What is the potential percent move that we're going to get? If we can work that out, then we can work out if it's worth our time and our capital in that. We do some analysis of the trade in terms of, looking at actual fundamental analysis, price analysis, news, flows, and everything like that, because we need to know when these things potentially might happen. Then we look at the time horizon for the trade, right? So entry to exit, how long is that going to be? How long is our money going to get tied up? Then we actually go into the specifics, looking at some technical analysis, looking at our entries, looking at where we place stop losses if we want them, how much risk that we're taking. So this is the process that we're going to go through. Let's start with the trade catalyst then, which is the thing that is going to move the price, right? So we're in at a current price. The market is mispricing this. There's something happening in the future that is currently mispriced, and the price of this asset is going to move to price in this thing in the future. Always thinking about the future, what is getting priced in, what does the market think now, what is happening in the future that is going to change the price as people trade short term. So we're trying to trade around what other people are doing. Remember, investing and trading are not the same. They're completely different. When trading, what we're really doing is trading the flow of money through the markets. So we're trading news flow, attention, the way that things move, and traders get pushed and pulled out into these different narratives. This is not investing. Investing is just saying, what are these big asset classes that I want to save my money in over time, right? And not worrying about this. We're trading, and so we're trading attention and flow. That's what we're doing. And so we need to know what are the things that are going to change the attention and the marginal flow of funds into which asset. So that's it. Another tip here is maybe you don't want to spread yourself too thin. Maybe a couple of assets to trade like this is enough in terms of the amount of money that you have and the amount of attention that you have to give to these trades. So when looking around, which ones are going to give you the best bang for your buck? So let's look at potential trade catalysts. Firstly, with BTC, what are potential trade catalysts? We have an ETF coming up. It's obviously a major catalyst. Rates are going lower, which is a major catalyst as of making this video. But of course, each time horizon is going to be different. So, if we're going into a bear market, things are going to be different. But the catalyst right now as of making this video, we have a halving. Let's look at this. Some simple research shows you this. Wall Street is now forecasting cooling inflation, potential cuts coming in early 2024. That's bullish for risk assets. We also have the Bitcoin halving coming up. This is the Bitcoin halving. By the way, all resources and everything I show you in this video, I'll link it all in the description below so you can see this for yourself. As you can see, what usually happens with Bitcoin is that you get a drawdown, you get a recovery. This is the current cycle. We're in the recovery. Then you get a Bitcoin halving and a massive expansion. So that's a catalyst for the Bitcoin halving right here. This is the Bitcoin price. And as you can see, we're moving out. We have the halving right here, which is usually where we get a upswing in price. So that is the catalyst, and that can play out over a time horizon, which we'll get onto later. as a potential for another asset, if you want to trade altcoins, potential airdrops and kind of airdrop seasons, right? So potential for Solana here. This is the Solana price coming out of a bear market, a big rise. Why? Because there's a big airdrop season, right? You can see Jito, MarginFi, Camino, these are all doing airdrops. So they're creating tokens and giving them out to people for free. This is a major incentive. They need people coming to their chain to use it. So they're creating tokens and giving them out as an incentive. This is a catalyst for attention and flow into this asset that we can trade. For another asset like Cardano, what do you have here? You have to look for catalysts that improve attention in that thing. So there are many dApps launching on Cardano. You have a potential stablecoin here that's launching around the next few months. You have a an exchange here that is quite new in the way it does things. That's a catalyst launching in the next few months. Catalyst for attention and money flowing in. Then we have other types of things as a more experienced trader that you might look at. For example, the way that we trade. Will Bitcoin outperform Ethereum, or will Ethereum outperform Bitcoin? So as an example here, Bitcoin has an ETF coming up. Ethereum has the ETF later. So over this next 3 months, which one has more chance of outperforming the other asset? Because if you're buying Bitcoin, what you're saying is over this 3-month period, Bitcoin will outperform the dollar or your fiat currency, because you're selling your fiat into this asset. You think Bitcoin is going to outperform your fiat currency. You can also say the same amongst cryptos. Will Bitcoin outperform ETH over these 3 months? Will Solana outperform ETH over these 3-6 months? Then you can make that trade. So what you can do here is use futures to trade like this. Now, what you can simply do is, if you have these two assets, you can just sell one of them to buy the other and then switch back if you want to do that. Another way of doing things a little bit more professionally is to use something like futures, where you can actually use one of the assets to collateralize a short position in the other. The way that you would do this is to go to a futures trading protocol. You can use centralized exchanges, you can use decentralized exchanges to take these positions. So what you can do here is actually do an inverse. So we're going to trade that, and then we're going to trade BTC like this. We're going to trade ETH actually. So ETH/USD like this. Now what you can actually do is use Bitcoin as collateral to take a short position in ETH. What you're doing is using some collateral in BTC because you think Bitcoin is going to outperform ETH, right? So you're using Bitcoin collateral to take a short position in ETH. So what you're doing is essentially saying Bitcoin will outperform and go up in value versus ETH. Doesn't matter if they both go down in dollar terms or up in dollar terms. You're just playing a spread between the two assets. So that gets a little bit more complex. I'll leave videos on how to trade futures in the description below because it is more complex. So I'll leave it for those videos. But these are the trade catalysts, the trade ideas that you have to go through knowing the market and what may happen over a specific time frame. The next thing we need to do is get a risk reward rating on the trade. This is going to be down to your opinion as well, but it's important to get this clear in your mind because then we can allocate funds in certain ways. How much risk are you willing to take? Where do you want to go on the risk curve, right? If the risk curve is this, where do you want to be on that, right? In terms of taking risk and volatility. So in terms of BTC, where would you be on a scale of 1 to 5, for example, 5 being the most risky, most uncertain? This is fairly low risk, right? Because we know the ETFs are basically coming, rates are coming down, the halving is a fixed event. And what happens every single time after the halving, we know what happens, right? Because we can see that. The probability of this happening again seems pretty high. So let's give that a rating of kind of like 1 to 2, right? In terms of our crypto risk, how likely, how volatile is this? Then going through to like altcoins as well, they have more inherent volatility, right? They have more, price volatility. Now that's obviously good to the upside. This is Solana here, big upside. But if, Bitcoin has a drawdown, whatever, these are going to be coming down as well. But it's about your opinion. The flows into some risk assets seem to be fairly strong. So, what's your opinion here, right? Maybe you're looking at 2 to 3 or 2 to 4, something like that. dApp launches on smaller chains. Do you think this is going to be more volatile? where are the flows here, right? You're looking trading altcoins. If you're just taking those positions, you're looking at something like that, right? Let's do 3 to 5 there. Outperformance, Bitcoin versus ETH. The amount that this is going to move is definitely not as much, right? If we look at Bitcoin traded in ETH, so we're going to do that right here. Bitcoin traded in ETH, it doesn't move as much in terms of percentage terms, right? So we've had a big move here. People are saying, well, ETH is underperforming Bitcoin at this part of the cycle. You're seeing that move over the last year. Ethereum moved versus Bitcoin around 40%, right? So it underperformed Bitcoin by about 40%. Now, bear in mind, Bitcoin has moved 150% or something like that. So this percentage move between Bitcoin and ETH is far less volatile than the actual price movements themselves. So this one wouldn't be as risky as taking positions in stuff like this, where you're just kind of naked going one direction, right? So maybe this is like 1 to 2 as well, because the percentage move isn't as much. So now you can determine how much money you're putting towards these trades. If you want to take all of them, if you don't want to take them, right? You can make a kind of a chart of where does the money go, right? You want to split your money up between a lower risk and a higher risk, right? Maybe 40, 60 or something like that. You can choose that, but get the risk reward here, how much they can potentially move in your opinion, based on some technical analysis as well. We'll go through that later on in the video, but you can see the price moves here, right? Solana moving a huge amount in the past few months, right? So we're getting, what, a 70% move. So that's double what ETH Bitcoin has moved in a shorter period of time. So the volatility of the trade and how risky it is in terms of what asset you're trading is important to get that in your head and then put some money into each of those trades. Now you have to go through with some trade analysis to get some more concrete timelines and to get this clear in your head. So we'll go through some examples for these trades. Bitcoin ETF, lower rates, halving. So as we can see here, I'll just go through some specific examples here. BlackRock, NASDAQ, SEC meet regarding Bitcoin ETF, right? So we can read this. We know this is coming, and some research tells us that the 10th of Jan is the date for those ETFs, more or less. Then we have lower rates. We know, we've seen that early 2024 was the potential for rate cuts around there. Then we have the halving, and that's very obvious as well, which is this one here. We know that this is coming around April 2024, and we usually get an expansion here. So we can do that again. We say April 2024. So all of this seems to be coming around the same time. Rate cuts, halving, potential ETFs. So early 2024, mid 2024 seems to be very, very decent. We also know that around that, the halving here, around 300 days, so about a year, you're getting a big upswing potentially in price. So you're looking for that trade from making this video, 12 months. So that is pretty simple, right? As a trade analysis. When you're looking at other assets, we have to understand, what's going on with them. I'll just show you with BTC here. You're looking at how this moves. So 2023 year to date, you can see 129, but actually the halving year, which is next year or 2024 as is making this video, is usually a much higher year in terms of percentage gains. So that would be for Bitcoin, the trade analysis there. Obviously you go much deeper than that, but research is telling us that these are specific points and times. Next we get to time horizon, because we need to know how long we're in these trades for. So very simple. As for Bitcoin halvings, this follows the macro cycle. And as we can see for Bitcoin halvings, you're looking at around 300 to 600 days for a bull market, right? So you have a bear market, you have a recovery out, and then around the halving and 300 plus days, more or less, you're looking at a huge expansion in price. Seems to be happening again. So you're looking around 300 to 600 days, right? 300 to 600 days or something like that for a potential trade. Airdrop season may be a bit shorter in time, right? So maybe you're looking at 6 months or something like this. And then outperformance here, a little bit different, because if a Bitcoin ETF is coming in Jan, and we know that an Ethereum ETF may be coming in, let's say May or after that, then Bitcoin may clearly outperform before that. But if an Ethereum ETF comes, will Ethereum outperform during this time as well? So that could be maybe a lot shorter time horizon. That time horizon is important because you need to know getting in and out of the trade, right? When are you doing that and how long are you happy to hold that trade for? Because it's really about time and not price. We don't know where the price is going to be. We cannot predict that. But these events are much more predictable, right? The central bank, are they easing or drawing money out of the system? And these events are pretty predictable in their timeline. So it's trading timelines and flows and attention, not prices. Now you have a potential trade idea and the time horizon. So we know when this is going to happen. Now we need to get our entries. So I want to go through some psychology here as well and understanding crypto without getting into the weeds with specific price levels and candlesticks, because I believe that is missing the forest for the trees with crypto. Crypto is such an expansive asset class. We've seen that these prices can move 100, 200, 250%, right? With a move like that, we just need to make sure that if we're right with our trade idea, we are there for the bulk of that move. So the one thing we need to make sure is that we don't lose money being right. What I mean by that is if you're using leverage, over leveraging yourself, you can see this was a Bitcoin bull market. And in that, we got these big moves down of 30+%. Regular drawdowns, you can see here. If you're over leveraged, using too much leverage, and you might get stopped out if you're using leverage. You don't have to use leverage, but if you are, don't get stopped out using too much leverage. So you got wrecked, but you were right with the trade. So how do we go about that? We can actually look at this. The reason we get drawdowns in price is because you get a big expansion, people take profits, which takes the price down, but also loads of leverage is used in crypto around the world. And people trade futures and they trade leverage, which means they put $1,000 in, the crypto exchange gives them $10,000 to play with. If they're using 10x leverage, a 10% moves wipes out their $1,000 that they put in to fund that trade. That creates selling, which creates more selling, which creates those drawdowns. We can see how the market is positioned. So let's have a look at this. We just need to make sure that we are there for the move, and any price movements, we can handle them. Okay, so this is Bitcoin here, a huge, strong move to the upside. And we have a potential resistance level right here. During bull markets, you're going to be breaking through these resistance levels and getting drawdowns. So you can see recently, we got a drawdown from this peak here around, let's say 11%. If you're looking to go long, great opportunity. 11% is a big drawdown for a short move. You can see these are potential drawdowns or previous drawdowns that have happened, right? So in this bull market, drawdowns have been very small, but in previous bull markets, you're looking at 20, 30% drawdowns in bull markets. Now, if your thesis is long because halving rate cuts, then any drawdowns are the opportunity to get in, right? If you don't want to wait for the drawdowns, then you're looking at making small entries over a period of a few weeks, right? You don't have to trade all at once. It can be over this month, I want to get this position. It's going to be 5,000 or 10,000 position. And I'm just going to get an average price for that month, right? But with the potential that we know that Bitcoin can easily draw down 20%, 30%. So we need to make sure that we're happy with that. And if we're using leverage, that doesn't wipe us out. How to do that? You can go to CoinGlass. Again, everything I mentioned is listed below. This shows you funding rates in crypto. Funding rates show us how the market is positioned. Now, when the market is too much one way, everyone is positioned one way. Guess what happens? You get a wipeout of that open interest because people are over leveraged one way, which means when the market does pull back, so in an uptrend, it pulls back to the downside. In a downtrend, it pulls back to the upside, right? It works both ways. When the market is very frenzied and you have a lot of money in and it's over leveraged one way, you get the potential for people to get wiped out of their trade. So people may be making money. They may put a leverage position in. The price goes up. They get equity in their accounts. They keep going in and in and in. They're making money. And then eventually, bang, it all gets wiped out. This happens over and over again in crypto because this over leveraged money is actually too much, right? It gets too big to be funded by the actual cash positions. So this shows us the heat map of that. When you see yellow, you're looking at very high funding rates. This shows us that the market is massively positioned one way. When you see a lot of yellow, the market is getting way over positioned. Now, in this case, you're seeing positive APRs, which means the market is very over positioned long. You see that here, right? You see the yellow. This is everyone going long, 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 leverage long, very, very bullish. See these altcoins, huge leverage longs here. You see Bitcoin and ETH a little bit less, but you're seeing a lot of these altcoins very, very highly leveraged. What do you expect to happen when the market is all one way and it's highly leveraged? There is a leverage flush, and that happened here. You can see funding and leverage got wiped out. That's when Bitcoin had its 11% correction. So you have to be ahead of this. So look at CoinGlass. You don't want to be with the masses, right? Wait for this, wait for everyone to get overdone. And if you have a thesis and a position for a 6-month trade, wait for this. Wait for the drawdown where everyone gets flushed out and you can see people are starting to go in again. So you can trade these flows, right? You can trade the flows here. You can trade up when things are getting way overdone. You can trade a little bit out of your position. When the flush comes, you can go in again. So that's day trading, right? Trying to trade these flows is you have a position, let's call it 10K, $10,000 position. When things are getting out, take 20% off the table, wait for a flush, put that money back in, and then you can be tactical trade if you want to do that. You don't have to do that. That's way more, time and effort, and you're gonna have to spend a lot of time looking at things. If you don't have that time, then think a little bit longer in terms of, no, from here to 6 months. I don't care about these leverage flushes. I just want to, over a month, make sure I'm in when we're doing well. So when funding is like this, I'm going to be getting in. When funding is like this, I'm not going to be getting in. Things are getting way overheated. Funding back here, another little bit added to my position. That is how you get slightly better trades and tactical, better trades like that, right? So look at this funding, look how the market is reacting. But remember, we get those drawdowns, but you just want to get a good entry for your trade. So you can look at technical analysis, you can look at potential, where are we? Are we getting these drawdowns? Whenever we get a 5, 8, 10% drawdown on that, their potential is to get in, because your thesis is 2 months, 3 months, 6 months out, the price is going to be wildly different. So that would be, getting into a trade. My crypto course has 300 videos like this on getting set up in crypto. If you want to know how to trade, specifics, how to use wallets, it's all there. Check the link down below for that. I'm James, this is MoneyCG. Cheers for watching, and I'll see you in the next one.